GM gives its earnings some gas. The automaker seeing strength in its North America sales. Yahoo Finance's Brian Sozzi sat down with the GM Chief Financial Officer Paul Jacobson to chat about where they saw strength in the quarter. Take a listen.
Demand is remaining firm for us. Our volumes were up about 4%. Revenues were strong. Pricing still lapping some of the increases that we did last year as a result of the higher input costs and commodities. But overall, really strong execution by the team. And when you combine that with the fact that I think our $2 billion cost program is coming in at the high end of our range this year, we felt comfortable raising the guide, even in somewhat of an uncertain macro.
Halfway through your earnings slide deck presentation, Paul, you added this line, which I thought was very interesting. GM expects to sell cars that are priced $30,000 or below, a good number of them, between 2023 and 2024. How many of these cars are you selling? And was this a quarter where consumers demanded more affordability?
We really saw strength across the board. So, for example, when you look at our pickup truck franchise, we were able to grow that. But at the same time, we see a lot of customers opting for the top-of-the-line trim models across the board, whether it's in the Silverado or the Sierra in our HD or light-duty pickups across the board. But affordability is something that we've been focused on for a long time. We've got a broad portfolio of vehicles across the board. And when you look at the Trax and some of those other programs, it's a high-quality vehicle that we've got for our consumers who may have other affordability challenges.
You really have great insight, Paul, into the economy. Of course, sitting atop the perch there at General Motors, but you've seen prior cycles. I think back to your time leading the Delta team in that CFO capacity as well. Where's the economy right now? Things from many vantage points looks like they're slowing down. Does that mean you have to become even more price sensitive and more affordable in the current quarter?
Well, we certainly have to make sure that we're watching all of the data across the board. So we spend a lot of time looking at dealer inventories, turn times on vehicles. We spend a lot of time looking at credit statistics at our GM Financial subsidiary. And so far from what we see in the data, our consumer is holding up quite nicely. And we're seeing a lot of demand, as I mentioned, even for some of the higher end trim levels as well. So it's still strong for us. We manage production to make sure that we're meeting demand. We did take a couple of down weeks of production to help balance supply with demand. And that was a strategy that I think worked really well. Our inventories were flat while our sales were up and our pricing was hanging in there. So, we're managing it as dynamically as we can, but we've also got to be focused on the longer term, which is why we're aiming for that $2 billion of cost reduction and really just beginning to help go get our structural costs in check.
I want to talk about what GM is doing, of course, in the electric vehicle space, but thinking back to the crisis in the banking space in March, what did you see from the General Motors consumer? And then as the CFO of General Motors, what were some of your early steps? Do you just go back and check the financials and shore up your debt position? Take us through that.
Well, the first thing we do is make sure that we are good stewards of our cash that we're holding on to and working with our supply chain across the board. And we didn't find any major issues when the banking crisis surfaced. We've taken some steps to be a little bit more conservative in our cash investments, but nothing material across the board. And then it's just tracking the consumer and making sure that demand is holding in there. And as you can tell from the results in the quarter, the performance was pretty consistent throughout.
As I look through these numbers, and I think one of the investor reads will ultimately be, Tesla came out here, Paul, and they were cutting prices pretty consistently through the quarter. Didn't see that impact in your quarter. Do you anticipate an impact in coming quarters if Tesla continues to stay out here and cut these prices?
Well, we've seen a lot of price activity, particularly in the EVs, from all of our competitors and really throughout the world, but even here in the U.S. Our pricing strategies remain consistent, and we think that's the right way to go. Our consumers have spoken with the orders that they've placed for our EVs, and we're focused on meeting that demand across the board. Longer term, we obviously have to make sure that we're maintaining competitiveness on our cost structure and making sure that we can keep our margins strong. along through that EV transition. So we're focused, we're executing well, but our pricing, we feel very, very good about where it is based on the customer response we've seen.
I see what you are doing at General Motors in terms of standing up more EV production. I see what some of your larger competitors are doing. But Paul, there's a lot of smaller competitors out there in this industry. Lucid, you name it. You look overseas, NIO, Xpeng. Do you expect there to be a shakeout in the EV industry as bigger players like you and some of your competitors consolidate that position?
Well, Brian, certainly this is still a scale business, and there are a lot of advantages to being large, whether it's through the supply chain or the economies of scale of production. So, we're focused on executing our plan across the board. I think the auto industry throughout history has had large players, it's had small niche players, et cetera. So it's going to be interesting to see how it shakes out, particularly as we look at raw materials and what it takes to build out that organization. And here at GM, we've been very proactive with our partners across lithium, across cathode active materials, with Lithium Americas, with POSCO, with Livent, and we're building up that infrastructure to make sure that we can produce a lot of vehicles at volume at affordable prices.
How many EVs will you make this year or next year?
So we will make about 50,000 in the first half of this year, about double that in the second half of next year, on our way to our stated goal of getting 400,000 from 22 through the first half of 24. From then, we'll be ratcheting up to 1 million vehicles in 2025. So we're in execution mode, and there's a lot of work going on here by the team, but I feel confident in their ability to execute it.
Are those million vehicles, are those profitable sales? What does the profit profile look like?
Well, what we've said is we can get to a low to mid single digit margin on EVs by 2025. And that's on our way to getting to parity, hopefully by the end of the decade is what we're looking at in the late part of the decade, getting to parity with ICE vehicles across the board. So a lot of scale advantages coming our way, a lot of things as we get better and better and more experienced at producing the EVs. But those are our goals long term, and I feel like we're on track to be able to hit them.
Any plans to split up that EV and the internal combustion business from a investor presentation standpoint?
Right now, we're committed to the geographic segments that we have. We talked at Investor Day back in November about we're going to put more and more EV data out as we build that up. Right now, it's not very meaningful just because of the low scale and the high infrastructure that we have right now. But as we increase utilization, produce more battery cells, and produce more EVs, we'll be very transparent with our EV profitability and the metrics we have.
That was Paul Jacobson, General Motors Chief Financial Officer, with Yahoo Finance's Brian Sozzi.